The world keeps talking about Bitcoin, but what should you actually know before you invest? Today we'll break down the 4 things you'll need as an introduction to Bitcoin. Hi, Dan here from 21 Shares. Today we're going to go through the 4 things you need to know about Bitcoin, including what it is, why people invest in it, where it might fit in a portfolio, and the different ways to get exposure. And if you enjoy this video, please remember to like and subscribe to the channel. Okay, so what is Bitcoin? Is it a bank or an app? It's neither of those. Bitcoin is a digital asset with a fixed supply of 21 million coins, and that number is non-negotiable. Bitcoin is the world's first and largest decentralized cryptocurrency. No single government, bank, or corporation controls it. It runs on a global blockchain, which is a public record everyone can see. The term Bitcoin refers to both the cryptocurrency itself and, slightly confusingly, also the network it runs on, the Bitcoin blockchain. As a digital asset, it lets anyone with internet access send value peer-to-peer without the need for a bank or any other third party anywhere in the world at any time, day or night. And Bitcoin has specific traits that lead some people to call it digital gold. These include scarce supply, divisibility, portability, interchangeability with any other unit, and global acceptance. And it's not under the control of a single government, corporation, or authority. Also, like gold, mining is how Bitcoin is created. In this process, specialized computers solve difficult maths puzzles to secure the network and verify transactions. If miners can prove they have done the work required, they receive an amount of Bitcoin as a reward. But, unlike gold, the rate of freshly mined Bitcoin is decreasing. This is because the blockchain is programmed to cut the reward available for miners by 50% roughly every 4 years. This stops Bitcoin from suffering from inflation and will continue until the last coin is issued in what is expected to be around the year 2140. Why buy Bitcoin? Have you ever played musical chairs with 21 million chairs and no one's allowed to add more? Because that's Bitcoin. For wealth preservation, scarcity, security, and diversification matter. We believe Bitcoin has all of these, which makes it stand out from traditional assets. Let's run through each of them in a bit more detail. Firstly, Bitcoin has a programmed and hard-coded finite supply of 21 million Bitcoins. This means, in our view, Bitcoin should be an effective long-term hedge against inflation and currency devaluation. For traditional assets, when demand or price increases, we can increase the supply, even with gold. But with Bitcoin, that's not possible. When demand or price increase, the new supply of Bitcoin continues to be released at the same programmed rate, which is roughly every 10 minutes, and neither the total amount or the rate of release can be increased. What most people don't realize is that of the 21 million Bitcoin that will ever exist, almost 20 million of them have already been mined. That means over 95% of all Bitcoin that will ever exist are already in circulation. Secondly, there's no central authority controlling Bitcoin. Like gold, Bitcoin is not controlled by a single government or central authority, meaning its price can't be manipulated for domestic or geopolitical gain. This should ensure it maintains its value as governments and central banks continue to devalue their currencies due to their unsustainable levels of debt. Another little known fact: Bitcoin has been designed to operate even if the internet shuts down, using alternative transmission channels such as satellite and radio. Thirdly, adoption is increasing and broadening. Today, most people don't own any Bitcoin, but its adoption is growing fast. We can see this because institutional demand is growing nearly 3 times faster than new Bitcoin is being mined, meaning big companies already own more than 4% of all Bitcoin, and governments like the US are beginning to explore it for national reserves. Plus, global adoption is accelerating as more investors have access to Bitcoin and see the value Bitcoin offers. Things helping it pick up speed are that although it's used as digital money, people understand its worth extends way beyond this, and they're using Bitcoin for many different things. Let's run through a few of them here. As we mentioned a moment ago, investors increasingly use Bitcoin to protect long-term wealth. Therefore, it's being used as a store of value. We also mentioned that it's being used to build national wealth through strategic reserves, helping nations improve their treasuries and hedge against national debt and inflation. And Bitcoin's distinct characteristics also mean it's being used for things like facilitating humanitarian funds. Non-profits, such as the Human Rights Foundation, accept Bitcoin payments to facilitate transparent, borderless donations. This allows charities to deliver aid quickly and efficiently in times of crisis. And finally, diversification within a portfolio. Historically, Bitcoin has shown low correlation to traditional stocks, which can help smooth portfolio ups and downs when sized appropriately. More on that shortly. How does Bitcoin fit into your portfolio? Even a small allocation can do some of the heavy lifting. In addition to potential returns, investors also look to Bitcoin for its diversification benefits. A key to smart portfolio building is choosing assets that don't always move in the same direction, aka diversification. Our analysis shows that Bitcoin maintains a relatively low correlation to global stocks and has resulted in improved portfolio performance historically. Adding even a small amount to your portfolio can have an impact. This is because Bitcoin's drivers can be different from stocks and bonds. And because it's driven by new technology rather than corporate profits, it often moves to its own beat, independent of the stock market. Your allocation will depend on your goals and your risk tolerance, and, as with any investment, sizing it so you can sleep comfortably at night is a great place to start. To read our research on this, head to 21shares.com. So how can I invest in Bitcoin? Should you buy Bitcoin directly on the blockchain or through your investment platform? There are essentially two main ways to own Bitcoin, and the right choice usually depends on how much homework you're willing to do. Path 1 is direct ownership. This is the DIY approach. In the industry, we call this self-custody. This is the purest form of Bitcoin ownership. And it works like this. You hold the private keys yourself. You have 100% control over the assets and can interact directly with the blockchain. But there's a trade-off. With total control comes total responsibility. You are the security guard, the IT department, and the manager. It's perfect if you're tech confident and want zero middlemen. But it means there's no forgot password button if things go wrong. Path 2 is exchange traded products or exchange traded funds. Depending on where you live, these are called ETFs or ETPs. These were designed to bridge the gap for investors who want the investment benefits of Bitcoin without the technical headache. And they work like this. The actual Bitcoin is bought for you and then stored for you with an institutional grade custodian. Your investment tracks the price of the asset, but you don't have to worry about managing a digital wallet or losing your keys. There are some upsides to using these products, such as, because they trade on major exchanges like the Nasdaq or the London Stock Exchange, you can buy them through your existing brokerage account. Plus, depending on your region, you can often hold them in tax-efficient retirement or savings accounts. Essentially, direct ownership is for those who want to drive the car themselves, and ETFs or ETPs are for those who want to get to the same destination, but using a familiar map. If you choose to go with ETPs or ETFs, look for what's called physically backed structures. What this means is that the product you are buying actually holds the underlying Bitcoin and is transparent about where they are stored. At 21 Shares, we use carefully vetted, independent, and institutional grade custodians, and we have done from the very beginning. Now, there are some risks to consider. Bitcoin can be more volatile than equity and bond markets. Rules can change. Custody choices matter. And if you use listed products, learn about the issuer and the custodian. Do your own research. Okay, so in summary, what is Bitcoin? It's a decentralized digital asset. Why buy Bitcoin? First and foremost, as a store of value. And because of its scarcity, broadening adoption, and decentralization, it offers diversification potential. How much Bitcoin belongs in a portfolio? Well, that depends on your goals and your risk appetite. But research shows even small amounts can improve portfolio performance. And how to invest? Either by directly using self-custody or using products such as ETFs or ETPs, depending on your region. We hope you've enjoyed this explainer on Bitcoin. If you want to dive a bit deeper into Bitcoin, be sure to subscribe to the channel and head to the 21 Shares website for more information. QR code and links on screen now. See you next time.